All right, let's jump right in. You sent over EasyJet's full annual report and results presentation. So I'm guessing you're ready to go deeper than just the headlines. Smart thinking.
Yeah, what's interesting with EasyJet is they're not just an airline anymore. They
Right.
got this whole other thing that's growing pretty fast. Their holiday package business.
Okay, yeah, let's break that down. We see in the report EasyJet Holidays revenue went from 776 million to 1137 million.
Yeah.
That's a 47% increase.
Uh-huh.
Are they taking off with vacation packages now?
They really are, and I think it's not by accident. They're really smartly capitalizing on two big things. One, people wanting these hassle-free package deals,
Right.
but also this rising demand for sustainable travel options.
Hmm.
So you see things like them partnering with hotels that meet these global sustainability standards.
Yeah.
It's a good way to attract those eco-conscious travelers.
So they're adapting to what travelers want. But
Yeah.
what about the core airline business? How do they stay competitive in such a crowded market?
Well, it's all about smart expansion and efficiency. They launched 158 new routes this year alone.
Sure.
They added bases in Birmingham and Alicante, and they're continuing to upgauge their fleet.
Okay.
So they're phasing out those smaller A319s and bringing in the larger, more fuel-efficient A320neos and A321neos. This is, classic economics: pack more passengers in,
Right.
burn less fuel per seat.
Makes sense.
Yeah.
But it can't just be about planes and routes.
Yeah.
What about the customer experience?
Yeah.
Airlines are kind of known for delays, lost baggage, grumpy passengers.
Yeah, they know that, and they're putting a lot into customer service. So you've got these airport customer experience specialists. They're introducing a revamped app,
Mm.
better staff training. They're really aiming for smoother travel and happier flyers,
Right.
which in the end, leads to loyalty, repeat business.
Okay, so they're working on all fronts, expanding routes, modernizing the fleet,
Yeah,
boosting that customer service.
yeah,
But on the holiday package side,
yeah.
what's their game plan to keep that momentum going?
Well, it's more destinations, more variety, more flexibility. They're expanding into year-round destinations like Egypt, Tunisia, Cape Verde.
Okay.
They're beefing up the city break offerings,
Wow.
giving more choices for accommodations. And they're also being pretty forward-thinking with their animal welfare policy.
Oh,
They refuse to promote any attractions that could harm animals,
interesting.
which really aligns with their sustainability focus and appeals to a lot of those ethical travelers out there.
Okay, so they're finding ways to stand out. But are these initiatives actually working?
Yeah.
Are they turning into financial success? Let's look at the numbers and see what they tell us.
All right. Let's shift gears a bit and look at their overall financial health.
Okay.
And specifically, focus on what matters most to you as an investor. Those hard numbers.
Yeah, hit me with the highlights.
Well, the big one, EasyJet's group profit before tax hit £610 million.
Okay.
That's a 34% increase from last year. And their profit per seat, that jumped to £6.08 from £4.91. Burton. Clearly something's working.
Those are some impressive gains. Is it just the holiday package boom, or are there other things driving this?
Well, it's a few things. Revenue growth is strong across both segments. Their total revenue climbed 14% to 9,309 million passenger revenue from the airline. That saw a healthy 9% increase. And then that ancillary revenue, those extras like baggage and seat selection, that jumped by 13%. So they're making more money from tickets and all the add-ons.
Smart. But revenue's only half the story, right?
Right.
What about costs?
This is where it gets interesting. While their headline costs, excluding fuel, rose 14%, their cost per seat only went up 1%.
Wow.
So that suggests they're getting more efficient.
Okay.
Likely because of that fleet upgauging and other cost-saving things they're doing.
So they're spreading those fixed costs across more passengers, basically. Squeezing more value out of each flight. What about fuel costs, though?
Right.
Those can be a real wild card for airlines.
Yeah, fuel costs are definitely a concern. They rose 9% overall, but they stayed pretty stable per seat. Again, highlighting how that fleet modernization program is helping.
So they're growing revenue, controlling costs, managing fuel expenses. It sounds like a good recipe for happy shareholders.
Yeah, and speaking of shareholders, let's talk dividends.
Yes. What's the payout looking like this year?
Well, they're proposing a dividend of 12.1 pence per share.
Okay.
Quite a jump from the 4.5 pence they paid last year. This aligns with their target of distributing 20% of profit after tax to shareholders.
So sharing the wealth.
Yeah.
But are they just focusing on short-term gains? What about their long-term financial targets?
Well, they're on track there too. They're aiming for a profit per seat of 7 to 10 and a high teen return on capital employed. They actually achieved a 16.1% ROCE this year.
Okay.
So they're moving in the right direction.
Yeah.
In terms of capacity growth, they're targeting a steady 5% per year, continued expansion, but in a measured way.
All right, so we've got a good overview of their business segments and how they're performing financially, but how are they actually planning to keep creating that shareholder value over the long haul?
Well, that's where we move from the what to the how. Let's take a closer look at their capital allocation strategy
Okay.
and those interesting share buybacks.
Perfect. Let's dive in. Okay, you mentioned disciplined capital allocation. Sounds kind of fancy.
Yeah.
But what does that actually mean for EasyJet? Are they just like throwing darts at a board of investment ideas?
No, not at all. Disciplined capital allocation means they have a really specific set of rules for deciding where to put their money. It's not just about growth for the sake of growth. It's about getting the best returns for shareholders.
Okay, so give us some real-world examples. Where are they putting their money where their mouth is, so to speak?
Well, we talked about the fleet modernization program already. They're spending serious money on replacing those older planes with the fuel-efficient A320neos and A321neos. It's a big investment upfront, but it pays off in lower fuel costs, more capacity, and ultimately a healthier bottom line.
So it's a long game.
Yeah.
What else are they focusing on?
Network expansion is another key area, but it's got to be strategic. They're targeting high-demand routes and important airports where they can maximize profit. Those 158 new routes, they're not just random additions. They're very calculated to tap into where travelers want to go.
Interesting. So they're being picky about where they grow. What about investments beyond the planes and routes?
Yeah, they're also putting money into technology and digital stuff to improve the customer experience and make things run more efficiently. Think about their app. It's been redesigned to streamline booking, provide real-time flight updates, and even offer personalized recommendations. These might not be as exciting as a shiny new plane, but they're essential for getting and keeping customers in today's digital world.
So the total approach to capital allocation, planes, routes, technology, all working together. Now let's talk about those share buybacks. You said they're a big part of EasyJet's shareholder value creation. How do those actually work and what's the impact?
Share buybacks are basically a way for companies to give profits back to shareholders directly. So when EasyJet buys back its own shares, it shrinks the number of shares out there, which bumps up the value of the remaining ones. And it can also increase earnings per share, making the company look even better to investors.
So it's kind of like a bonus for the shareholders? Do we know how much they've spent on buybacks this year?
Well, we'd have to dig into the financials for the exact numbers. But the annual report highlights their commitment to buybacks as a key part of their capital allocation strategy. It's a clear message to investors that they're focused on returns.
Okay, so we've talked strategy and how they're using their capital wisely, but let's actually look under the hood at those financial statements. Where do we start?
A good place to start is the income statement. It shows us how much EasyJet is bringing in, how much they're spending, and what their final profit is.
Okay, break it down for us. What should we be paying attention to?
First revenue, EasyJet splits it into three main categories: passenger revenue, ancillary revenue, and holiday revenue. As we saw earlier, all three are doing well, which is good.
Yeah, we saw those growth numbers, pretty impressive. But what about costs?
Their biggest expense is fuel, which was $2,223 million for the year. Makes sense for an airline. But you got to look at costs in relation to revenue. Remember, their cost per seat only went up 1% even with fuel prices going up.
Yeah.
That shows they're really focused on being efficient.
They're managing costs. Well, what else jumps out from the income statement?
Their EBITDA earnings before interest, taxes, depreciation, and amortization is important. It gives a clear picture of how profitable they are from their operations. For the year, their group EBITDA was $1,367 million. That includes both the airline and holiday businesses.
That's a pretty healthy margin.
Yeah.
What happens when you factor in those other things like depreciation and amortization?
You subtract those from EBITDA, and you get EBIT earnings before interest and taxes. For the airline part, their EBIT was $597 million. So they're still making a good profit even after you account for those non-cash expenses.
Okay, so the income statement looks good. What about the balance sheet? What can we learn from that?
The balance sheet gives us a snapshot of their financial health at a specific moment. It tells us what they own their assets, what they owe their liabilities, and the difference between the two, which is their equity.
Okay, let's start with assets. What are some of EasyJet's most valuable things?
Well, their biggest asset is their fleet of aircraft. They've got over 300 planes valued at more than £5 billion. But remember, planes lose value over time. We saw that reflected in the depreciation expense on the income statement.
Yeah, they're constantly flying, racking up those miles. What about other assets?
They also have things like goodwill, property, plant, and equipment intangible assets. Goodwill represents the value of their brand and reputation, which is a big deal in a competitive industry like airlines.
Okay, so they've got valuable stuff, but what about liabilities? What do they owe?
Their biggest liability is lease liabilities. Basically, the future payments they have to make for leasing their planes. Leasing is really common for airlines because it lets them use a modern fleet without needing to spend huge amounts of money up front.
Right, that makes sense. Any other big liabilities we should know about?
They also have borrowings like euro bonds, which are debt securities they issue to investors. Other liabilities include things like trade payables, deferred revenue, and money set aside for future expenses like maintenance.
Okay, so assets and liabilities. What does all that tell us about their overall financial picture?
To figure that out, we look at their equity. The difference between their assets and liabilities. EasyJet's total equity was $3,728 million at the end of the year. That's a good chunk of equity and shows a strong financial base.
So financially, they're in a good spot, but what about cash flow? That's the lifeblood of any business.
Absolutely. The cash flow statement is super important for understanding how cash is moving in and out of the business. It's broken down into three parts: operating activities, investing activities, and financing activities.
Let's start with operating activities. What's happening there?
Their cash flow from operating activities was really strong. They generated $1,664 million in cash just from their core operations, which shows they're good at turning profits into actual cash.
Wow, that's a lot of cash coming in. What are they doing with it all?
Well, they're putting some of it back into the business through investments. They spent $980 million mostly on new planes. This fits with their fleet modernization and their plan for growth in the future.
So they're reinvesting to improve their assets. What about the financing activities part? What's going on there?
They had a net inflow of £33 million from financing activities, meaning they raised more money than they paid back in debt. They also paid out $34 million in dividends to shareholders, which shows they're committed to giving back to investors.
Okay, so strong cash flow investing in growth and rewarding shareholders. Sounds like things are running smoothly.
Yeah.
What about free cash flow, though? Isn't that important for investors?
Yeah, it is. Free cash flow is what's left over after accounting for those big capital expenses like buying new planes. It's the cash they have available for dividends, share buybacks, or paying down debt.
So more free cash flow is better.
Generally, yes.
Okay.
And EasyJet's free cash flow was a solid $684 million for the year. This gives them a lot of flexibility to reward shareholders and invest in future growth.
All right, so we've covered a ton of ground, from business strategy to digging into their financials. It seems like EasyJet is doing really well. But before we get ahead of ourselves, let's step back and look at the big picture. What does the future hold for EasyJet?
That's the question, isn't it? Let's think about the potential challenges and opportunities ahead and see if we can get a clearer idea of where EasyJet's going.
All right, so we've seen that EasyJet's in a good place financially right now, but the airline industry, it's always changing. What are some things that could cause trouble for them in the next few years?
Yeah, you're right. The airline industry never sits still. One big challenge is that European airspace. It always seems to be congested. Leads to delays, disruptions, passengers get frustrated.
Yeah, those air traffic control issues can really mess things up for an airline. What else worries airline CEOs?
Well, cost pressures are always there. Fuel prices going up and down, labor costs, maintenance expenses. It's a constant fight to keep those costs in check.
And then there's the whole economic situation.
Yeah.
A global recession could really hurt travel demand.
Definitely, macroeconomic shocks are a big risk for any airline. People cut back on travel when the economy is not doing well. It's one of the first things to go.
So some potential problems out there.
Yeah.
But how's EasyJet prepared to deal with those? What are their strengths?
Well, one big strength is their balance sheet. It's really solid. They have an investment grade rating, one of the best in the industry. That gives them some protection against those potential problems.
Okay, so strong financial foundation. What else is going for them?
Their commitment to sustainability, that's something that sets them apart. They're putting a lot of money into reducing emissions, and they want to be a leader in getting to net zero flying. This is good for the environment, obviously, but it also makes them attractive to customers who care about that. And it puts them in a good position for the future when there might be new regulations or carbon taxes.
So they're thinking ahead. What about the customer experience? Are they improving there?
Their customer satisfaction scores are really good. 84% of their customers are happy, and 82% say they'd book with them again. That shows how much their efforts to make travel better are paying off.
Yeah, repeat customers. That's so important for any business. But in the airline industry, it's all about innovation. Are they keeping up with the latest trends?
Oh, they're not just sitting back. They're investing in things like fuel efficiency and improving the digital experience for customers, always looking for ways to be ahead of the game.
So it sounds like EasyJet's in a pretty good position overall. They've got a solid business model, good financials, commitment to sustainability, and they're focused on keeping customers happy. But for someone thinking about investing, what's the bottom line?
Well, EasyJet's definitely a company that's growing and making money. They're committed to giving back to their shareholders. But airlines are always a bit unpredictable. There are always risks to keep in mind.
Right. It's all about weighing those risks against the potential rewards. What's the one question an investor should ask themselves about EasyJet?
Here's something to think about. With all their focus on sustainability and new technology, do you think they're in a good spot to handle the challenges coming up? Or are there other things that worry you more?
That's a good question. It's all about deciding if their strengths are enough to outweigh the risks and if their plan matches up with your investment goals.
Exactly. It's about making smart decisions based on really understanding the business and the industry.
Well, we've definitely given our listeners a lot to think about today. We looked at EasyJet's different business segments, broke down their financial performance, and dug into their plans for creating shareholder value. We also talked about the challenges and opportunities they might face in the future.
Yeah, we went from those holiday packages all the way to the details of their balance sheet.
Hopefully, this deep dive has given everyone the information they need to make good investment choices.
And remember, this is just the start. Keep learning, do your own research, and good luck with your investing.
Until next time, keep diving deep.